Yeah, Friday. What's up, everybody? Friday morning, we've made it to the end of the week. I hope everybody's having an amazing, amazing day. We are about to kick it off like we do each and every day, identifying both breakouts and reversal opportunities in our 10 to 12 futures markets. Some of our levels are from yesterday's live trade room. Thank you to all of you who made it in our live trade room yesterday. If you missed our live trade room, what in the heck were you doing? Become a Traders Army member today by going to tradersarmy.com. Use the promo code TRADER60 to get 60% off your first month. See what it's all about. Lord knows, hopefully this week we've had a pretty strong week with some of our levels and some of the trades that we had, and it all started with our Sunday night session. So come join us for Sunday night. All right, let's go ahead and get started. So the ES this morning, we are up 24 points as we've just kind of continued our rally skyward. And the ES rallied right off of our little wick over wick demand area yesterday, where we had this nice wick over wick here. Price did come back down into that zone. We got a nice little touch and then bounced off to our target. So that one moved for a little over 20-some points. It gave you another opportunity at that level if you wanted to try it again in the afternoon as a confirmation entry, because remember, once it was touched once, it then turns into a confirmation entry on the second touch. And it is still rallying from that point. So hopefully you were able to catch that. Now, I do have a lot of traders that are still long from our ES breakout earlier in the week as we were looking at that on Sunday night. So, you know, one of the things that I say all the time is that you make good money when you learn how to day trade. You start to make true wealth when you're able to hold positions for a longer period of time. And if you think about it from that initial breakout, the markets, have gained almost 100 points from that initial breakout point. And that's really the way that you're going to start to generate significant growth in your account. So what I'm going to do now, though, is I got to take this level off. This level's no longer valid, but for those of you that caught it, nice trade. Good work on that one. Now we've come back to our breakout point on this level. And when I go to my 4-hour chart, there's no reason to assume that we're going to slow down the upward momentum. I mean, our momentum has slowed a little bit, but there's no reason to assume that we're not going to make it up to this next area of supply. And that next area of supply is at 32.17 by 32.53. So we have some room to go until we're there. And that may not be a great area to go short. We'll have to look at it when we get to that region. But if you want to take advantage of this move higher on our hourly chart, you're getting a little bit of a pullback, possibly an opportunity to get long on a candle-to-candle area right through here. I will look a bit lower and see if, we have a clean demand area, but I don't really see this is coming off of a pretty decent little demand area from this point, which is why the candle-to-candle trade makes sense. Some of you may already be up and trading this morning, and if you are, this was a good opportunity to get long. All right. Let's go ahead and take a look at the Nasdaq this morning. So looking at our Nasdaq trade. So the Nasdaq, we were actually looking at this yesterday for, can I pick up 10 points from here and trade it down to this next level? And it actually worked out pretty well if you just wanted to pick up a small day trade. It then came into our reversal point, and we've seen price rally up from that level. So both the Nasdaq and the S&P levels worked out really well. And so now we're sitting below this 97.63 area. That area we were looking at yesterday as a potential breakout zone, but we need to have basing inside that circular area because that 97.63 is that all-time high, right? We would need to have some basing in front of there in order to get us the entrance for price to move in. Now, sometimes when we're just below that all-time high, we will get that basing before a thrust higher, and that thrust higher comes pretty quickly. And let me show you an example of that. If we go back and look back in February, here's an example of that, right? We come to that all-time high. We get a fair amount of basing here, and then we get a really nice move up from that point. And that's what I'm looking for as a potential, is that if we get the quality basing below this all-time high, we may be able to thrust through there. Now, the Qs did already, I think yesterday, put in a new all-time high, and it's kind of continuing to rally up. but I would still need that basing in here for me to want to take that long. As far as a pullback to an area of demand, I feel like yesterday's was the really good opportunity for an entrance, which it gave us a pretty good little pullback spot on there. From our overnights, we actually have fallen off of this little wick over wick area here on the 15-minute chart, and come down pretty nicely from the in the Globex session. But if our 4-hour and our 1-hour remain constant, we have a better chance for price to reverse off this level. So like I said, if you want to get in on this one, candle to candle could be an opportunity here for price to continue to trend higher. The only fear I have is that this little pivot did not create a new swing high. It was unable to pierce that controlling high. So it could be a little bit weaker heading into the weekend. It's possible you could see some profit taking heading into the weekend. And both of these positions, if you plan on holding them over the weekend, both the ES and the NQ, make sure that you are hedged using options on futures. In the Russell, so we've started looking at the Russell every day in the daily market commentary at your request. In the Russell, and I'm going to give Joe a shout out, one of our members yesterday. Joe found some of these levels in here yesterday for potential reversals. I think it was this level here that he was looking at and got a really nice run off of the zone. Not a bad trade at all. Grabbing a lot of this and rallying higher. So good job from the trade room yesterday. And so now we've rallied up. I'm gonna actually identify this area here, which we've not yet retested this. As a potential reversal. There's a really clean wick over wick right here that was formed. Now, it's not a great time of day at all. The time of day is really the weakness in this trade, but I'm gonna wrap my lines around it because I feel like it's the right setup for a good opportunity. So I'm gonna wrap my lines around this wick over wick area, but know that my stop would have to go below that wick below there. Okay. Once again, though, not sure if we'll make it in there. This is a great reversal candle for a candle-to-candle style trade, in which case you might want to be long in this position. All right, moving over and looking at crude oil. So in our crude oil positions, starting with the September contract, that's the one we've been talking about. Our September contract, we were looking at a little bit of a pinch in here. Now, I will tell you, I was looking for price to potentially break below this blue line to get us a short entry down to this region. But we actually wound up getting a breakout above this area for a potential long entry. So if you missed it, don't worry about missing the breakout. Let's keep our eyes focused on the next opportunity. And I believe that prices have a better chance of continuing to run because we are in the gap area. And when I say the gap area, I'm talking about this big gap right in here. So I'm going to wrap some lines around the bottom of that gap. Because that would be where we would target that price would return to come back into this area. Now, on a pullback, if we get a good pullback level, I'm going to look back here to really right around the European market open on a smaller time period. And that would be this area right here for a potential reversal. All right. Next is gold. And gold yesterday, we had a breakdown trade. And gold had a little bit of a move down through here. But we are still kind of in between our major levels of supply and demand. And I've been talking about gold as being really an iron condor opportunity for the last few weeks. And I think it still remains that style. If you don't trade options on futures, it's definitely something worth taking a look at. We've actually got a free course on options on futures. If you go to tradersarmy.com with a free membership, it's underneath one of our free classes. You can watch a class on options on futures. If you don't know anything about them, it's a very, very useful trading tool. So take a look at that. But we're still in between our levels of supply and demand. Nothing really new to add. Just understand where those levels are. All right, moving over to our bonds and currency markets. And the ZN, we finally got our breakout in the bonds, and it broke down again yesterday. So that continuous breakdown has kept moving, and it is a bit lower at this point. So we originally had the one from that we've been looking at for weeks and weeks, which was this area, was this line here on the 4-hour. So we had this line here on the 4-hour for a number of weeks. We broke below that, and a lot of you grabbed that trade, and then it set up in yesterday's live trade room for another opportunity with a break below here, and price is continuing to move down. So now what I'm going to look for is a potential reversal trade as we are firmly entrenched in a downward trend. Looking at our potential reversals, I would look to, this area here in the overnight is probably a really clean level. We also have this area here, which is the origin of the overnight move down. So it was really overnight where we saw the bonds, come down pretty consistently. And so zooming in on this, going to maybe a smaller time period on a 15-minute chart. I don't want to have recency bias, but this is a nice little level just right in here. So if price comes back into there, that actually might make a lot of sense. It's a pretty good little level. But I'm going to come up and just wrap my lines around this pivot up here, which I think could be a decent little setup on the 15-minute time period. It's nice to actually have a level to look at in bonds since we haven't had one in quite a while. The Aussie, so in our Aussie position, we were looking yesterday to see, okay, is it a potential for a breakdown for price to get down to here since we were seeing a slowing of momentum? And the market said, no, it's not. I did get, I got my alert because we had an alert set up to see if this was going to make sense. And I did get a little bit of basing in front of this level, but we did not come down for a breakout below this level. So I'm going to leave it here. I'm going to leave my alert in place. But, I think the better chances for price to continue to trade higher. So if you want to take a little bit of a breakout above this region here, provided that we get the basing, I think that makes a pretty good amount of sense. Next, the euro. In our euro level, look at all these demand levels. Look, demand, 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 demand. And that means that it's a bunch of demand levels that you haven't been able to play with because you've not gotten the retest. When we're looking at these, that's why breakouts become so important. And so as we can see, we're clearly in a very strong uptrend because we're seeing weakness in the U.S. dollar. And as that very strong uptrend continues, we have to look for ways to get long in these positions. Well, I'm going to put a line here above there if we get basing for a breakout. We also are seeing a little bit of slowing. It could come back down into this region here. Now, I'm not saying that this is a great opportunity to get short below here because you're going very clearly against the trend. But a bit lower on our 15-minute, we have a demand level inside of this red candlestick's wick area. So take a look at that for our better reversal zone. All right, Canadian dollar. Now, the Canadian dollar is sitting right below a breakout point, so that one could break out at any moment, and we could see a move to the upside. That's continuing with the trend for price to continue to move. I don't have a strong reversal level below there to look at, but I would say that one makes a lot of sense. On our 4-hour, the area that I have, we're sitting right below a gap fill area, but we're basing in front of it, which is typically what makes for a good breakout. And so I think our target, you'd want to, at about a 2-to-1 reward to risk, move your stop to break even. Great British Pound and Japanese Yen. So the pound yesterday, we were looking at a potential breakout above this line, but I was really looking for basing in between these areas. We've got base, so we got a little bit of breakout above this line. And then I was looking for basing in between these areas. I didn't get basing in between there, which is why we just popped above. So I still think that there's a chance we can continue to rally higher from here, but it would be more of a candle-to-candle style now at this point, off of this low for price to rally higher. Now, if we do fall back and come back down, and we have, and this is kind of like what we're looking at in the euro, is that we've got a lot of demand levels below us that haven't been retested. I like this area here for a demand area retest. But once again, don't know if we're going to make it down to there. That's fairly far away. I just want to at least highlight that area and show why it's important. All right, and then our last market of the day is our Japanese yen, which we had a really nice breakdown in the yen. So our breakdown trade, we got a little bit of an area here and then broke down. It's continuing to move down. So I would continue to play this down to the downside. If you didn't get short on this one, I'm okay with you getting short on this at this point now, with your stop being just above this green candle's high and your entry being below this red candle's low, because that would be a good pivot area for price to continue to move lower. So join us on Sunday night. I'd love to have you. If you're not already a Traders Army member, understand why we look at Sunday nights. Sunday nights are our best nights of the week to trade. You've got to start your week off right, and you get a competitive advantage over your competition who's not looking at the market on Sunday night. So join us on Sunday night, tradersarmy.com, promo code TRADER60 for 60% off your first month. We're starting a movement here, kids. Become part of the movement. I'll talk to you soon. See ya.